Hello guys, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report with Alpari. So we are back after Easter break, Easter holidays. Most of the European markets were closed yesterday, so the liquidity and volatility was lower. We were also closed on Friday. Well, currencies were tradable, but the volatility and liquidity were significantly lower. Now we're back, and we're back with nice volatility caused mostly by Theresa May, Prime Minister in the UK. Because today, a few hours ago, she said that she seeks earlier elections, general elections in UK, which should happen in June, because before entering the negotiations with European Union, she wants to see if they have full support from the British people. Which is fair enough. That's a good thing to do. Well, at least in my opinion. First reaction on the market is British pound being much stronger. But we will show you that in a second. Now, let's take a look on the calendar, because, well, apart from that, apart from the news from Downing Street from London. Now, we just have usual tensions around North Korea. We have usual tensions around Syria. Obviously, it's hard to say just like that we do have tensions in Syria, because this war is terrible and totally shouldn't happen. But from the market point of view, day-to-day situation in Syria is not influential on the markets. Sometimes where we do have bigger tensions between two superpowers there, so between US and Russia, those headlines from Syria are affecting somehow the stocks and commodities, etc. But usually they don't. Situation in North Korea mostly affects safe haven assets like silver and gold. Yesterday, for example, we had yearly highs, but the day on silver and gold ended bearishly. But it does not have serious consequences today, so we can assume that was just low volatility, low liquidity, low volatility candle. So it's not very influential. But let's take a look on the calendar, what we should expect this week. As you can see, not much. What we got yesterday was GDP from China, which came as 6 and 9. So we all know this target of 7% that they are talking about all the time. We do have major numbers like industrial production and retail sales better, not than expected, but than the previous number, so it's not so bad at all. What we had today was Theresa May saying about earlier general elections in UK. And still to come, what do we have is data from housing market from United States. Well, we can say that industrial production will be influential, and also GDT price index, which is influential for New Zealand dollar, because it's a change in the price of dairies, and we all know that New Zealand dollar is the biggest exporter, one of the biggest exporter of dairy products in the world. So this index is very, very important for New Zealand dollar, and usually we can see a reaction on New Zealand dollar after this number is published. On Wednesday, CPI from Eurozone, trade balance from Eurozone, and that would be it because Fed's beige book is not very influential on the markets. Thursday, overnight actually, Wednesday, Thursday, we do have CPI from Australia. On Thursday also we do have a speech from Mark Carney. He's Bank of England governor. Mr. Mnuchin, Treasury Secretary from US, will have his speech as well. His words are very influential on American dollar. We can see he spoke many times since he was elected, but he had I think 3 or 4 major speeches, and in some of them he said directly about the strength of American dollar, and we had a reaction on the market after his words. So you can see, well, it won't be the quietest week from all, but it won't be so huge in terms of the macro data. But we should have enough market movers, so don't worry about that. Let's take a look on the charts. Right now, what's the situation on the markets? Well, first, obviously, let me start with cable because it's our pair of the day. It's our pair of the day. What do we have here is 2 symmetric triangles. Here is a smaller symmetric triangle, then a bearish breakout, then a bigger symmetric triangle, which is with us from October. And you know us because you're following us for quite a long time, right? You're with us for a long time, and you know that we were bullish on the cable. It's not that we are telling that today or something, because you're following us for a long time and you know that we were bullish on cable for some time. Why is that? From the fundamental point of view, we generally believe that this downswing was too strong. Traders were exaggerating this fear over Brexit, and this is here. I think that hard version of Brexit is being discounted, and I don't think it's gonna happen. Traders were just a little bit too harsh for British pound. That's from the fundamental point of view. From the technical point of view, symmetric triangle is not a trend continuation pattern. It's more or less 50-50. So as a price action trader, what do you have to do? What do you have to do is just wait for a breakout to happen, right? So you shouldn't believe that you will have a bullish breakout or bearish breakout. Obviously, we had a bullish scenario here, but if we would have a bearish breakout, so a breakout of the lower line of the symmetric triangle, we would not hesitate to open a short position there. Why not? If that's what price wants to do, as a price action trader, you should trade it. Okay, so what the situation was in the midterm, we bounced from the lower line of the symmetric triangle, and then the price created a wedge. Wedge is a trend continuation pattern, and this pattern happened below a long-term resistance, which was indicating that we should get a test of this resistance soon with a possible breakout. We had another contact with a bearish candle, but it did not cause a reversal. The price advanced higher, and today we got a breakout, obviously driven by fundamentals. But with fundamental analysis goes together with technical analysis, the signal is extra strong. What is the closest resistance here? The closest resistance is around here, which is still 130, 100 pips above. I am sorry. So we do have a legitimate buy signal here, obviously for now. For the long-term buy signal, what they need to do is to hold the price above at least highs from March. If they would hold around these levels, that would be fine. Maybe, let's say, above this line. They should not be able to retrace more than 50% of this upswing, right? Slightly, yes, we do have 50%. We do have those horizontal highs, so maybe they can have a bounce and then a continuation. As long as we stay above 50% of the retracement of today's candle, the sentiment is positive. It looks so far so good. Next instrument with British pound, because that's the currency that we're gonna focus on today, is Euro to British pound, and you know that as well. For some time I'm watching this because I was waiting for the price to get exactly to this green rectangle here. Why is that? Because this rectangle is an ultimate support created by the long-term uptrend line and the lower line of the symmetric triangle formation. And here we have a crossing of those two lines. And I said that, well, I don't know, it looks like a decent support, right? But for opening a position, what you need to do is to wait for a price to show you the direction, right? You either wait for a bounce or for a breakout. Here, what happened was a breakout. First, we had a nice bounce. As you can see here, we had a nice bounce, but it was false, and the price broke lows. And we are waiting what's gonna finally happen in this magic green rectangle, which I just deleted because you know where we should expect this situation. So here you have this crossing of those two important supports. We also have a horizontal support from February, which actually makes it yearly lows. So it's another support in our basket. Yes, we do have yearly lows for this pair. Well, I would say that as long as we stay above this horizontal support, the situation is not clear yet. Once we will break it, that will be a definite sell signal on this pair, Euro to British pound. And the next instrument, which is British pound to Canadian dollar. Okay, let me start with a weekly chart. You remember double bottom formation. So we have lows from 2016 here, lows from 2017, that's the second bottom, and here we do have a bearish bullish engulfing. After this, what we had was a sideways trend, and then the price broke the midterm resistance, was still supported by a midterm uptrend line. Then the price, okay, here broke a horizontal resistance here. So first we broke this line, then dynamic resistance, then we broke a horizontal resistance here, then we used that as a support along with the midterm uptrend line, and the price created a wedge. All that together gave us a positive sentiment for this instrument, possible positive scenario. And obviously Theresa May today is helping our view to become a reality. The price is making yearly highs, and it looks very, very positive. Now the closest resistance for this instrument is here, which is 500 pips higher, which makes it a very interesting trading opportunity because here everything looks bullish. Okay, those three pairs with British pound give a bullish view on the sterling. and this is along with our view that we are presenting you for a long time. So if you're with us, if you're following Kalpari research and analysis, if you follow us on our Twitter account and our website, and you're watching our daily analytical reports, you shouldn't be surprised with the recent development on the pairs with British pound. And I hope that our analysis helped you with trading. Okay, let's focus on other instruments. American dollar to Swiss franc, which is in this ascending triangle, inside this ascending triangle, long term, and a midterm flag between those blue lines. We should get an upswing, so a bullish breakout, but after the bearish bounce from the upper line of the flag, what we're having here is the price heading lower, but in general the sentiment is still positive as long as we stay above this horizontal support and we stay inside of the flag. The sentiment is positive. American dollar to Japanese yen. That's an interesting situation because we had a massive downswing after the price broke from this long-term flag and broke this descending triangle. But what we got here, and we were warning about that yesterday when the price was, I think the price was somewhere here and was creating a hammer. So the price was 70 pips lower, that it's possibly time for a correction because the price was making a hammer. And it is a correction. So again, if you followed us on Twitter, you could take advantage of this. Now the price is just making a typical correction. It's well, so far it's a typical correction. It's nothing. It's nothing dangerous. Let me create a trend line here. So as long as we stay below this trend line and below this horizontal resistance, the sentiment is negative. Once we will be able to break this resistance and this trend line, the sell signal will be gone, right? Sentiment still will be negative, but the sell signal will be gone itself. Maybe sell signal will be back somewhere here, let's say here, once we will come back to the lower line of the flag formation and this horizontal resistance, right? You need to learn to open positions close to important resistances and support, because these are places where the magic happens, right? You don't open positions here. You either open here or here. And euro to American dollar is heading higher. Well, Mnuchin, Trump said American dollar is too strong. Mnuchin said that American dollar is too strong, so American dollar is not so strong anymore. Well, and it still is, but we are heading to the highest levels here on euro dollars in April. What we are having here is euro dollar defending the lower line of the wedge formation, right? If they would break the lower line of the wedge, that would be the end of the bullish dream here. But as long as they stay in the wedge, the bullish dream is still I wouldn't call that a dream, actually. It's a hope. It's a hope dream. We are living in a bearish dream because the price is going higher, the price is going lower. But buyers have their own dream, and it's not dream, hope. And they want to see the prices inside of the wedge as long as possible. But wedge is a trend continuation pattern. This wedge with black lines is a trend continuation pattern, so we should see the price declining. Maybe not this week, maybe not next one, but in the long term. So every further upswing can possibly be used by sellers to open new positions with better prices. Australian dollar to New Zealand dollar is our next instrument, and we had the position here. We had the long position, which we closed on break-even point. Actually, we managed to earn like $7 on this, and it's good that we closed this position. And this is a perfect example that Now, once you are on profit, you should protect, you should move the stop loss order on break-even point and escape if you can, if the price reverses, because the price was doing good. So we protected our order by moving stop loss to break-even point, and the price closed our long position and then went lower. So we would be on loss. Actually, we would end up with a full stop loss, and we didn't. As I said, we managed to earn like $7 on that. So nothing. It's a break-even. It's not a profit, but it's better to have break-even than a full loss, right? The price broke two important supports. First one is a long-term uptrend, long-term downtrend line, as you can see here. This red one. And the second one is a horizontal support, which is a neckline of this inverse head and shoulder formation. Right, so this denies the buy signal. We are still in a wedge. Wedge is a trend continuation pattern, so buyers can hope for a bounce here. But if you're trading based on hope, you're not actually trading. You should trade based on signals, not on hope. And here, in terms of signals, what do we have here is a breakout of two important supports, and the price is still above one less important. So that's definitely not a buy signal here. I think that the buy signal is gone, and we shouldn't, traders should not consider buying here. What's going on in safe haven assets? On safe haven assets, first we start with gold. As you can see, we got yearly highs yesterday, but in the same time, that's a bearish candlestick. But traders today, take it easy. They are not panicking, they are not retracing. The price is kept relatively high. What do we have here is the price of the gold broke long-term resistance here. Resistance created by the line connecting recent important lower highs. That's bullish. The closest resistance is on $1,306 per ounce, which is $20 higher, and we should get there. Not today, maybe not tomorrow, but soon we should test this resistance. Maybe after a bearish correction, maybe not, but the sentiment is positive. The buy signal is triggered, and technical analysis is giving us hints that that's where the next target for this instrument is. As we are talking about gold, so let's move to silver. Silver also created a dangerous candlestick pattern. Not only a bearish candle here, but also when combining it with this one, it's a bearish engulfing. It's a bearish engulfing on a horizontal resistance. This resistance is created by this line. It's bearish. It's definitely bearish in the short term, because in the long term we do have a buy signal. Obviously, we do have yearly highs, so you cannot go short when you have yearly highs. But in the short term, that is a bearish signal. Personally, you know that I do believe that the price of the gold and silver will go higher. So I wouldn't enter the market with the short position here. I would rather wait for a bullish pattern somewhere here, if the price will go lower. But I would use lower prices for opening long positions. American dollar to Polish zloty. Polish zloty is getting stronger despite the trend. Maybe we'll have another test of this horizontal, not horizontal, but long-term uptrend line. But it's a direct impact of the sentiment around American dollar, which is said to be too strong. So that is why it's going lower. It's also obviously supporting the cable. Actually, we do have a position on cable. I can show you. Anyway, if we started with the live trading, I can show you anyway. We are earning 1,000 euros so far. It was opened here. It was opened yesterday. As you can see, our stop loss order is already on profit. It's on break-even point, so it's above the entry. So even if the price will retrace, we'll earn on that $100. Euros, I'm sorry, which is fair enough, but obviously I would love to earn 1,000 instead of 100, but you never know, guys. You never know how it will go. So yes, this is cable. We talked about cable. We talked about all those pairs with British pound, Australian dollar to American dollar. After the false breakout, the price advanced higher, but now we're struggling to keep this upswing alive. That will be the closest resistance. As long as we stay below this resistance, there is no buy signal here. Euro to Australian dollar. This can be considered as a false breakout. And now we have a reaction. So let me just do it like that. Let me just do it like that. As long as we stay below the line connecting top of the head and right shoulder, because that was a head and shoulder formation, left shoulder, head and right shoulder, that was a neckline, that was a false breakout. But as long as we stay below this line, the sentiment is neutral. But if we will be able to break this this line, the sentiment will be full positive. New Zealand dollar to American dollar defended this horizontal support and this long-term uptrend line. It depends how you put this line. And the sentiment in the midterm is positive. Here. About oil and indexes, we will talk tomorrow, because there's not much to show you right now. More interesting situations are happening on the currencies right now. Let's scan one more time the market. As you can see, we are on a monthly lows on American dollar to Swiss franc, but our view is still bullish. Euro to Japanese yen, it depends. If you will see a bearish reaction here, there will be a bearish signal, sell signal. If you will see a breakout, that means a bullish signal. So as you can see, it's pure price action, right? So you trade what the price is trying to tell you, not what your opinion is. I don't care if the price will go up or down here. I just want to earn money on this. And you earn money by watching what the price is trying to tell you and following that. So far, I don't have a signal because the price is close to the resistance, and I cannot see if they want to bounce or have a breakout. And actually, I don't care. I just want to earn money on this movement. Euro to American dollar looks positive. Australian dollar to New Zealand dollar looks negative. Gold positive. Silver positive. But on silver there is a negative short-term situation, which is now ignored, which is also a signal. If if traders in general are they do not care about such a strong reversal signal, that means that they are strong. American dollar to Polish zloty, most probably we will test this uptrend line. So in the short term, there is a bearish signal. All pairs with, as you can see, we are making higher highs. So those Fibonacci's are not relevant. So let me check. Probably $1,100, $1,200. Yes, 1,100 euros. I'm sorry. With the new highs. I don't show. Okay. Euro to British pound, as long as we stay above the green support, the sentiment is not negative. Once we will break it, it will be full negative. British pound to Canadian dollar positive, here neutral, here we need, I would say, 30 pips higher, 30 pips more for a positive signal, and New Zealand dollar to American dollar positive. But remember that we will have GDT price index today, so an influential data for this instrument. Okay guys, thanks very much for watching Trading Sniper, not Trading Sniper, daily analytical report. I hope you enjoyed that. Obviously, remember that trading and investment in financial markets involves an element of risk. And also, as you can see, our review is happening on the market right now. So if you want more of that, follow us on our Twitter account where we post like 10, 20 tweets a day, and our website altparty.news. Thanks very much and good